All right, let's dive in. Back in July 2025, a single legislative moment completely changed the game for crypto in the US. We're going to break down this fictional, but super important, reset that finally brought some real rules to the Wild West of digital finance and, unlocked billions in investment. So, here's the plan. We'll start with the chaos that was holding everything back. Then we'll get into the two big laws that cleaned things up. After that, we'll look at the massive impact this had on the market. And finally, we'll wrap it all up to understand the new reality for crypto in the States. Before 2025, if you had to describe the US crypto market in one word, it would have been uncertainty. The whole system was stuck in this massive turf war that kept all the serious big money investors just waiting on the sidelines for a green light. Seriously, for years, this was the million-dollar question that nobody could answer. And it wasn't just some theoretical debate, right? This lack of clarity was actively killing innovation, it was scaring away investors, and it just created this constant anxiety for anyone trying to build a real business in the space. So on one side, you had the SEC arguing that a lot of these crypto tokens were basically just stocks. But then on the other side, you had the CFTC saying, whoa, hold on, assets like Bitcoin are commodities, and that's our territory. The result of this fight? Just a messy patchwork of lawsuits instead of a clear, simple rulebook for everyone to follow. Okay, so to finally end all of that confusion, Congress stepped in. And the first piece of the puzzle was a huge piece of legislation called the Clarity Act. Now, the really brilliant thing about this act is that it didn't just pick a winner between the SEC and the CFTC. No, it did something way smarter. It basically said, let's stop arguing about labels and start looking at what these assets actually do. The Clarity Act created these two really simple, clear lanes. If an asset acts like a stock, like it represents ownership in a project, it's a restricted digital asset, and the SEC is in charge. But if it's a mature, decentralized network like Bitcoin, well, that's a digital commodity, and the CFTC takes the lead. Just like that, everyone finally knew which lane to drive in. But hold on, the Clarity Act only solved half the problem. What about stablecoins? The digital dollars that are basically the bedrock of the whole crypto economy? Well, that's where the second law, the Genius Act, comes in. The goal here was absolutely critical, to prevent some kind of catastrophic collapse by making digital dollars just as safe and reliable as the money we keep in our bank accounts. The Genius Act created the very first federal rulebook for how these US dollar stablecoins have to work. And at the very core of this was an ironclad commitment to stability. The act demanded that every single stablecoin be 100% backed by safe, liquid assets like cash or short-term government bonds. This completely ended the era of risky business with reserves. From then on, one digital dollar had to equal one real, verifiable, and safely held dollar, period. But this act was about way more than just reserves. It basically pulled stablecoin issuers into the real financial system. They had to get licensed, publish their reserve reports every month, and follow the exact same anti-money laundering rules as banks. I mean, this one move did more to build confidence with regulators and big investors than anything that had ever come before it. Okay, so with the Clarity Act defining assets and the Genius Act securing the digital dollars, what was the actual ripple effect? What did this mean for the big players, the banks, the hedge funds, all the firms that had been waiting in the wings? The effect was, well, immediate. It was like a dam breaking. With legal certainty, firms finally knew the rules of the game. That clarity built real trust in the market. And that, in turn, made everything more efficient. And suddenly, the US became this magnet for global talent and money that had been going to other countries. This new legal landscape immediately split the industry in two. You had the early movers who jumped on the new rules and quickly gained a huge advantage and built trust. And then you had the laggards, the ones who tried to stick to the old ways. They got left behind, facing not just big fines, but the risk of being seen as outlaws in an industry that was now all about legitimacy. So when you step back and look at the whole picture, these two acts weren't just a few new regulations, no. This was a fundamental top-to-bottom reset for the entire American crypto industry. And honestly, this quote from our source material just nails it. The point wasn't to kill innovation. It was about swapping out ambiguity for structure, speculation for accountability, and chaos for compliance. It was all about building that foundation of trust needed to finally unlock what this technology can really do.
So these two laws, they really marked the definitive end of the Wild West era for crypto in the United States. And that leaves us with a really thought-provoking question for the future. Now that the foundation of trust and clarity is finally in place, is this the moment the real revolution in digital finance actually begins?